Now, if you've been a part of these webcasts over the past year, you've heard us talk a lot about the idea of reflation. And just to recap what that really means is coming out of the summer of last year and into the election cycle, you started to get some inflationary pressures. You started to get some belief that economic growth was going to come back. And the big kind of accelerator to that was the rollout of the COVID vaccines. So if you remember the day that the announcement was made that there was going to be a viable vaccine for people was right around the time of the election. And with that came the possibility in a lot of people's minds that we were going to be able to go back to normal, that the economy was going to be able to open back up and we were going to be able to put COVID behind us. So based off of that, we saw the reflation trade really start to pick up. Now, as we look at this chart, this goes all the way back to February of 2020. So right at the very beginning of COVID breaking out. So what you'll see is this is just a ratio chart showing a reflation basket, and the reflation basket and themes are represented by things like commodities, real estate, energy, banks, hotels, things that are very cyclical, very economically sensitive. And then the COVID winner stocks or sectors are going to be things like at-home entertainment. So something like a Netflix, your online retail, the digital economy, COVID-friendly travel, social media, things that are basically ensuring that you're not leaving your house and everybody's going to have to do everything in the confines of where they live. So when COVID started in earnest, the performance of those COVID winner stocks really outperformed the reflation basket. As we can see, as this line moves down, this just means the reflation basket is not performing well versus those COVID themes. So that takes place all the way down in a significant number here, all the way down to a trough right around the middle of summer in 2020. Then you started to see a little bit of pushback with the reflation into August, big jump, another drop, and then now we're slowly moving our way up. We get right around that November date that we mentioned before. We're kind of halfway through this as I think there was some expectation that this was going to take place. And then we get a reacceleration all the way through to right around, I'd say that the end of the first quarter of this year. Now, what happened then, you had the Delta variant popping up. You had concerns that the best of the growth rates, both economically and from an earnings perspective, were behind us. And we may start to fall into the same pattern that we saw in the early parts of 2020, where rates were going to come back down, deflation pressures were going to come back up. And what you can see is these COVID winners that were successful in 2020 started to become successful again. And we come to a point here a few months back, and we start to see the Delta variant waning a little bit. We've showed a lot of COVID charts over the past few months, and we didn't include one in this particular presentation. But the numbers nationwide continue to come down. Inflation pressures continue to pick up. And what you're seeing is the possibility of what we would call reflation 2.0. And we've seen that basket of cyclical stocks begin to move its way back up. And I think this is an important theme in the market because it's been a while since we've seen this kind of zigzag of leaders taking place. For the past, I'd say 6 or 7 years, growth has really dominated the performance landscape, while value has lagged a little bit. But now we're actually seeing different leaderships taking place in different regimes. And I think it also very much depends on the function of the yield curve. And we're going to get into that a little bit later in the presentation.